Hey everybody, Jimmy here. Welcome back to the channel. So today's Monday, fresh start. It is June. We are in a brand new week. It's time to get rolling. Did you see Facebook? Did you see Amazon? And did you see Google today? They all had 3-bar plays. I want to show them to you. I want to show you the entries on them, the exits on them, how they were located, what the daily charts looked like, and ultimately how far did they go? What targets did they hit? Because they all hit 2-to-1 targets, which is exactly what I'm looking for. Every day is the 2-to-1 target with a 1R unit of risk. Let's do it. All right, let's dive into things. First off, I want to apologize. You're going to hear popping and rattling in the background. We're actually having our roof replaced, so I apologize for a little bit of background distraction noise. But today was pretty interesting. I saw 3 names that had pretty good moves, and I just want to break them down and show you kind of what I saw in them. And let's go to Google. So this was a very interesting one that you can see really well on the 5-minute chart. Just some really great trading today. But if we go to the daily chart on Google, and let's actually back out just a little bit. So you can see here that Google gapped down below these green bars, so there was a little bit of surprise there. And then it cleared this pivot and that pivot and this pivot and this pivot and this pivot. It's just was a really good gap down. And if you want some more information on really good gaps and stuff, I recommend Live Traders. Jared Wesley over at Live Traders has some great videos on gaps. You can just search that on the YouTube channel, and they just have a lot of really good content. But today this gap was really good, and if I flip back over here, look on the 5-minute chart, you can see that we opened up this morning after some pre-market activity was just trailing down. We got this big candle that pushed down that broke the pre-market activity to the low and then set up a beautiful 3-bar play with this paused resting candle here. Both the similar lows, and then basically you just set your order to go short below the low of this candle and take it 2-to-1 down. So you'd have about a $5.25 stop on this candle. So your order to buy or to sell to go short would be at the low, and then you put your stop loss just above this high. So 525 was about what you needed to do, and this stock easily gave 2-to-1 to the short side. So it was a really good setup. Between 139 and 138 was a 2-to-1 target. So right in here, so you'd have hit your 2-to-1 right in there and doubled your money. So really good play on Google, really good daily chart, really good gap. It was just a really nice setup. So I wanted to start off with that one, point that out to you guys, talk about it a little bit, get your comments on it, and also hear if any of you traded it. I actually didn't trade this one. I missed it this morning. Now the other one was on Amazon. And with Amazon, I'm going to flip over here and show you the daily chart first. But Amazon had a gap down last week with a red day on Friday. So it is a little down. You know, it's not like it was a surprise, like it had been moving up and then gapped down. It had already kind of been pushing down. But the key with this one, in my opinion, is this gap down cleared this pivot right here. And then at the same time, it opened and pushed down below the 200 simple moving average. So that's a bearish sign in my opinion. So I was kind of excited to see this today. And then if I flip over and we break down the 15-minute chart, the nice thing on this one is you can see this pre-market activity. So pre-market, so we had the gap down this morning. Pre-market, it was sort of rolling around, pushing up. Then when we opened, we got a break of this level. And this level is interesting because the low on this candle is 1748.50. So remember, we've talked in the past about psychological support and resistance at whole and half dollars. So anytime you're hitting a whole dollar or a half dollar, you can expect that there might be a little slow up in the price action because those are common areas to bounce off support or get bounced as overhead resistance. So in this case, you could have set your order just below that $0.50 and had that breakthrough and triggered you in. If you had done that, it would have triggered you in and then it pushed straight down. And then if your plan would have been to hold for, say you would have stopped yourself up here, and you had a pretty decent sized stop, or even maybe above this level, maybe you had a 50, let's see, that's 160, 149. So maybe you had like an $11 or $12 stop. You would have needed a little more room to hit your 2-to-1, but it hit here and bounced and then rolled over. So a 2-to-1 target on this stock, even if you stopped yourself, at the high of the pre-market this morning, you would have made your target. So this was another great, pretty amazing trade opportunity. And it's still right now, it's 11:30 Mountain Time, 1:30 East Coast time, and it's still bleeding. It's barely pulling back. It's just moving sideways and then breaking lower. So Amazon, another great play today. And the final one I want to talk about, let me flip back over to the daily chart. And let's actually jump in and talk a little bit about Facebook this morning. This was another one that came up this morning that I thought looked really good as well. And I'm just going to zoom out on the daily chart a little bit. So the key with this one was we gapped down and cleared this pivot. We also cleared this pivot. And the next stop was the 200. And what's interesting right now, as you can see on this, that price action went down, bounced off the 200 simple moving average, and now moved up a little bit. So there's proof, there's a great example of how important the 200 simple moving average is. And the other day we were talking about how most traders have the 200 simple moving average on their chart, on their daily chart. And this is exactly why, because it's getting a perfect little bounce right there. But if you would have played within these boundaries, there was profit to be made there. And if I flip over to the intraday charts on Facebook, you can see there were, I think, a couple opportunities on this one. So if you look at this one right here, you're getting this 1 minute right out of the gates, igniting bar that's breaking the pre-market lows. Then you're getting a pause. Now, this one is not perfect because this wick is a little bit lower than that one, so it did kind of break it, but nonetheless, it's still set up pretty nice and would have given you an easy 2-to-1 target. Now, if we come down here to the 2-minute chart, you can see it's set up down here as well. So 2 minutes, so push down here. Now this one's a little closer to that, to being equal, and then this candle broke the 3-bar play to the south. So a 3-bar play short, you would have taken this one, you'd put your order in on the 2-minute chart at 173.19, would have been a great place to put your stop limit order to go short. And then your stop loss you'd want to put at 174.01, 1 penny above the whole dollar, which is right in here. And then it would have rolled over and you'd have gotten your 2-to-1 plus. If you'd have sold most of your position at 2-to-1 and held some on the backside, you would have made even more on that one. So pretty exciting trade on Facebook this morning. Stuff was just moving around. And one thing I'm noticing that I wanted to share was, last week I took a trade that set up similarly and it failed. And I wondered, why is it that that one failed and this one didn't? And one thing I'll say is if you have a second screen or a way to put up another chart right next to you, so you're watching all these charts and then sitting next to you is another chart and the only thing you have on it is the SPY, you will be very happy because this can be of huge importance. This can really help you. So if you look at the SPY this morning on the 5-minute, so for example, so here's the SPY. 5-minute chart opens up here and is pushing down and dumping, right? Well, what did the same thing? Does that look kind of familiar? It's some stocks follow the market, and Google matched it and pushed straight down with the market. So my plan moving forward is I'm going to have another little screen here set up, and I'm just going to have the SPY. And another one you can have on your screen are the Qs. Look at the Qs, same thing as Google this morning. So having a chart with what the overall markets are doing, the SPY is following the large cap markets, and it's a way to sort of keep an eye on what the market is doing. Is the overall market moving up? Because the SPY incorporates all the large cap stocks, it's a nice way to keep an eye on the market. So if you can watch easily, you can watch the SPY and say, okay, what is the SPY doing today? Oh, it's moving up right now. And if it's pushing up really hard, a lot of times I'm only interested in long positions. And then if the SPY rolls over and starts going south and is selling off really hard, then I'm more likely to take a short position. Now, that's not always the case. If you look at that Facebook trade, you can see that Facebook on the 5-minute chart this morning was Facebook this morning selling off hard. So it was, I guess, everything is just, I thought there was one that was differing, but it didn't. Everything's playing right along. So it's amazing how some of these stocks will fall right in step with what the SPY or the Qs are doing. So if you keep an eye on those, they're just really valuable. Because if you're about to take a trade, say a 3-bar play is setting up and you're really excited thinking, okay, I'm going to take this one. And it's about to set up and you're about to put your order in and you look to your screen, you see the SPY, and the SPY starts ripping north, then a lot of times I'm going to say, ooh, I'm going to hold on this. I'm not going to take a short position when the market's ripping north. It's just too influential on some of the stocks. So it's just something to be aware of. Watch the SPY, watch the Qs, be uber aware of those when you're trading these stocks like Facebook and Google and Amazon. Even stocks like Twitter, sometimes Square. Some of those stocks just kind of follow along with the markets, and it's you can get a pretty good idea of what's going to happen based on what the SPY or the Qs are doing. So anyway, hope you guys had a green day today. Comment below. Let me know if you traded Facebook or Amazon or Google today. The one thing I will say about Google, you say, oh, it's way too expensive of a stock. I can't do that. And really, I take my stop loss and say I wanted to risk, I'll do the calculation right now. Let's say I wanted to risk $50 on the Google trade. I take $50 and I divide it by that stop loss. On Google, the stop loss was $5.25. So that means I would take 9.5 shares. I would probably just round it up and take 10 shares, and which would be the equivalent, 9 that times, let's look at the Google price currently. So current price on Google is about 1026. So I'll multiply that by 1026. So I'm looking at about pretty close to a $10,000 position. So you don't have to, just because it's a high price stock, the way you're calculating your shares that you need to take is dividing it by your stop loss. So if you have a really expensive stock, a lot of times the stop loss is going to be a lot larger than if you're trading a stock like maybe AMD or Twitter or one of the stocks that are in the 30s, range where, 10 cents is a decent move. So when you divide your risk, which in my case was $50, by a larger stop loss being $5.25, you can see it scales me way down. I'm only taking 9.5 to 10 shares. Whereas if it were a smaller stock with a smaller stop loss, maybe 20 cents, then I'm taking multiple hundred shares. So large versus small in terms of price on a stock, don't be intimidated by Google or Amazon because you can scale them way down. I think I was looking at Amazon one time on a trade, and with the stop loss incorporated, I was going to end up buying almost 3 shares, which is pretty funny to think I'm only buying 3 shares, but sometimes that's all it takes to make good money because these stocks are moving. They can move $25 in just a couple of minutes. So you just keep that in mind. Just because Google is really highly priced and Amazon is highly priced doesn't mean you have to take 1,000 shares. You got to scale based on what your risk R level is. So with that, I'll go ahead and wrap things up. I know this video's gone on a little longer than normal, but thanks for stopping in today. Comment below, let me know how you did today, and we'll be back at it tomorrow morning. Thank you.